So a couple things. So on the macro side, I don't think we're out of the woods. I don't think we're on the precipice of some calamity either. I've said for probably the last year that this recession, and I actually believe we're in the recession, right? I think they'll call it retrospectively. They'll say it probably started, March, April last year, and we're probably closer to the end than we are to the beginning. But it's a shallow recession, very similar in my mind to the 01 recession, right? 01 didn't even really feel like a recession other than the fact that things got exacerbated by the lockdowns following 9/11. If you go back to 2001, it was interesting in that we had the tech bubble starting to bust. First quarter GDP was negative. Second quarter GDP was marginally positive. Third quarter was negative, exacerbated by 9/11. And then fourth quarter was positive. The whole year, GDP was actually up 1%. We're still waiting on fourth quarter number. With the fourth quarter number, last year is probably going to be a positive number. But we still had two negative quarters, January, February. Third and fourth quarter weren't real. What I mean by that is most of the GDP was simply the resale of the oil from the SPR, which is just a bogus way to create GDP, but is what it is. It's like the broken window fallacy of hurricanes, right? Hurricane hits, they don't count the destruction against GDP, but they count the rebuilding for GDP. Doesn't make any sense.
Exactly.
It's like retail sales numbers. Retail sales numbers do two things that are just silly. One, they don't adjust for population growth. If there's more people buying stuff, sales go up. You have to adjust for that, but they don't. Second thing, they don't adjust for price of gas, right? Price of gas goes up, and so retail sales are up. No, that's just a price increase. That's not a good thing. I may buy less gas because it costs more. So little things like that drive me crazy. But that's a long-winded way of saying data's bad, right? Leading economic indicators have been tumbling. Lynn probably talked about that.
Yep.
And you think about the future. We got bad demographic trends, right? We got a lot of people from our age cohort, the boomers, that are turning 65 to 85 and starting to retire, and that's negative for productivity. It's negative for working age population growth. GDP equals working age population growth plus GDP. Both of those are sub 1%. So other than cheating like by selling oil in the SPR, it's going to be tough to get greater than 2% GDP. So it's going to feel not very good. You throw on top of that the Fed continuing to tighten. Everybody says, oh, they're pivoting. Well, they haven't pivoted yet. They slowed the pace of tightening from 75 to 50, and now people are saying, oh, it's going to be 25 this month. Maybe. We'll see. But even that is still hiking. That's not cutting. And so I think the macro is still a headwind, is that. Now, on crypto, I think we're in the middle of one of the great short squeezes of all time. And it's not just crypto. It's everywhere, right? If you look at this month, right, the first 3 weeks of January, the crappier the company, and crappy is a technical term, the crappier the company, the more money they lose, the worse the business, the more it's up. Peloton, Zoom, GameStop, AMC, 60, 70, 80% this month. Forget, over any meaningful period of time. We're talking 3 weeks. Now, the problem is, when you're down 95% and then you rally 80%, you're still down, in the 90s. So it's not really that good. But there's a interesting thing going on this year, Paul, that hasn't happened for a long time. So years ago, there used to be something called the January effect, where people would sell their losers in December for the tax loss. They had to wait 30 days to buy them back. So in January, all the stuff that was horrible the year before did really, really well. And it was known as the January effect. And it was really small cap and micro cap names by and large. And that's where the excess returns for the year came from. Well, they changed the tax laws a number of years ago that made mutual funds sell by October 31st, not December 31st. And so the January effect got shifted to November. So if you look in the middle of November, just about every year, you have this 2-3 week period where the crappiest companies, right, the things that were just horrible all year, did really well. And you didn't get the January effect. Well, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down, crypto. So the regular folks actually did some tax loss selling. So those tax loss sales were of the horrible companies like Peloton and Zoom and AMC.
Right.
And they now are rallying in a huge short squeeze. And Bitcoin, I think I have this right, Binance just had over a $500 million collapse of shorts on their platform. So we are way oversold. Way overbought. We are as overbought as I've ever seen Bitcoin. So I still believe we're in crypto spring. Crypto winter's over. We got through Hurricane Sam, which I didn't anticipate. And that's where we went. We were at kind of 18,000, and that's what I thought was the bottom. And then we had Hurricane Sam that took us down to 15. And now, when we got back to 18, that to me is spring. Spring is choppy, ugly, not really up and to the right. Up and to the right is summer. Summer's still 3, 4, 5 months off in anticipation of the halving. But, so could we have a retracement back to 18 before we head? We're not. There are a lot of people saying we're going to be new all-time highs this year. Possible.
That's interesting.
Definitely likely in early 24. Here's an interesting stat. Every halving adds a 0, meaning it increases the market cap of the Bitcoin asset by tenfold. So we went from 1 to 10 in the first halving. Then we went from 10 to 100, went from 100 to 1,000, went to 10,000 in the last one. And I think, January, February next year, we go to the 100K. And we'll surpass that, because then the next one after that, brace yourselves, right, is 1 million 4 years later in 2028. People say that could never happen. No, it will happen. It's just going to take time.